This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And I'm going to say something very important, so listen up here. Look, for some people, bad news is good news. And for other people, good news is bad news. So today we have a very important guest because you're going to be finding out that as this market is crashing, it's very good news for some people. And for other people, it's terrifying news. But for some of you, what you might hear will scare the you-know-what out of you. And for other people, it might be the most exciting thing you can ever hear. So the question, everybody says, well, is the market going to go up and the market go down? Or the stock market especially. I mean, that's what people follow. But anyway, I'm watching Bubble Vision, CNBC, and they're saying, we had a bounce. It's going to be another rally is coming. We're going into a bigger future. The fundamentals are strong. Unemployment is low. Jobs are plentiful, yada, 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 yada. And other people, I was at dinner, and people said, well, is it going to keep going down? And I said, God, I hope so. And they go, what? And you see, understand this. In any market, all markets go up, and all markets come down. You know, and I've been saying this for the last 70 years. We've been in a secular bull market. That means since the end of World War II, basically, the U.S. market has kept going up. So you didn't have to do much. You just put your $10 down, and 5 years later it was $20. So the people who are so used to a bull market for the last 70 years. But now it's chopping up and down and up and down, and many people are saying, well, it's going to keep going. It's going to keep going. And other people are saying, no, it's going to go down. But today's guest is going to tell you why he doesn't really care. You see, if you can understand that, and that's why the Rich Dad Radio Show is here, because you have some people say it's going to go up, and other people say the market's going to go down. So our guest today is an old-time friend, is Dr. Alexander Elder. He's a professional trader and author. I got to know him via his work and his students in Australia. And he is an ardent follower of very, very successful traders who understand how Dr. Elder thinks, how he looks at markets. It's not that he doesn't care, but if the market's going up, he's going to make money. And the market's coming down, he's going to make money. And it's not that you don't care. To me, that makes more sense than what I call the 401k buy, hold, and pray. Let's pray it keeps going up. And the whole market is completely manipulated. Even the gold market's manipulated. So what are you praying for? Just know it's going to go up and down. So we're going to hear some very important talks from Dr. Elder today is how you can look. We're going to look first at the macro, the big world economy. Why is it going up, bouncing up and down? But also what you might need to do to see the world as a person who is a trader. Somebody, not a traitor, a trader. That when the market goes up, you make money. The market comes down, you make money, because that's kind of how I look at everything. And so that's why over dinner at Kim's mother's house, I wasn't the most popular guy there because I said, I don't care if it goes up. I don't care if it goes down. If it goes down, I'm going to make money. If it goes up, I'm going to make money. Now, the guys who cared are what they call long.
They have all of their money in the stock market.
All of their money in the stock market.
And their retirement is based on the stock market going up.
That means they're long. They're not short, right?
That's right.
So it was an interesting conversation.
It was an interesting conversation. But you know what I find fascinating is how the stock market has become the main indicator of the economy. If the stock market's up, the economy's good. If the stock market's down, the economy's bad. What about jobs? What about production? What about all that? Our guest, Dr. Alexander Elder, is a doctor of psychiatry. So he's a professional trader and a doctor of psychology. And we were talking before the show, and he said, Dr. Elder said, when a person has money at risk, intelligence goes out the window. So welcome to the show, Dr. Elder.
Thank you very much. Thank you.
So, Dr. Elder, let's give a macro view. When you step back and you look at China, you're just in Africa, Europe. What I watch is the debt market, bond market, more than anything else.
Yeah.
But what do you watch as a stock trader?
My time frame is not hugely long. I do have some very long-term positions, but most of what I do is swing. And every morning I do my homework. I have a spreadsheet which I fill out every morning First of all, I begin by looking at Australia and Japan because the markets open in that part of the world. Then I look at UK and Germany, and there's like a wave running across the globe. Begins in Asia, proceeds to Asia, comes to us. Of course, American market is the most important. From us goes on to Asia. And you want to see in what direction it's flowing and how that wave sometimes changes the direction. I look at Baltic Dry Index, which is the cost of dry shipping goods on the ocean. And that's a super sensitive indicator of world economy.
Why is that, Dr. Elder?
Because most trade involves transport. We're buying electronics which get shipped to us from Asia. We sell wood that gets shipped to Asia or to Europe. Machinery. I mean, everything goes by boat, and the cost of shipping by boat is a very it's a very sensitive indicator because when the economy picks up worldwide, the cost of shipping increases because there are only so many ships.
So that's called the Baltic Dry.
Baltic Dry Index. It is called that because the exchange is located on the Baltic on Baltic Street in London.
Right. Oh. That's kind of near and dear to my heart because I went to the school to drive merchant ships throughout the world. So I understand what you're talking about. That it's carried by trade. So anyway, so why is the Baltic Dry Freight Index so important to you, and what did it mean in 2007?
Just a minor correction. There's no word freight in it. BDI, Baltic Dry Index.
Dry index. Okay.
It's very important because the massive percentage of world trade is carried out by ship as goods move between the continents. Very expensive goods get flown, but everything else gets shipped. And so as soon as the economy starts picking up steam, the cost of shipping goes up, and when the economy starts dropping a little bit, just getting a little looser, cost of shipping drops. And so you can really tell when a depression or recession is coming or is not coming by looking at what's happening with Baltic Dry. I look at it every morning. It's available on Bloomberg. It's available everywhere. So that's part of my homework, and then I proceed. I have an opinion of what's happening in the world, what's happening in the United States, and then I look for my trades.
So what happened again? What happened in 2007 that gave you an indication that something was about to change?
The economy was booming in 2007, and Baltic and the demand for shipping was immense. And Baltic Dry Index has reached a record number of 10,000. It was trading at 10,000 points. Within a year, it dropped from 10,000 to 1,000, and everybody was still fat and happy, and the stock market was still going up. But of course, a vicious bear market ensued a few months later in 2008, and Baltic Dry was leading that whole picture, except very few people pay attention.
So when that happened, Dr. Elder, what did you do trading wise?
I was selling stocks short. Trading is a two-way street. You can make money on the way up, and you can make money on the way down. When things go up, you obviously want to own things, and when things start going down, sell short. Professionals love shorting because stocks fall about twice as fast as they rise. And if you know what you're doing, just the money comes much faster from shorting than it comes from buying.
So as a professional, let me give you some of Dr. Elder's background. He was born in Leningrad and grew up in Estonia, the great country of Estonia. Entered medical school at the age of 16. At 23, while working as a ship doctor, he jumped a Soviet ship in Africa, received political asylum in the U.S., and has worked as a psychiatrist in New York City and taught at Columbia University. But he is most famous for his book, Trading for a Living, his latest book, The New Trading for a Living, The Psychology, Keyword Discipline, Trading Tools and Systems, Risk Control, and Trade Management. So the thing here I want to talk to, so Dr. Elder looks at the big picture, but then he goes into what was called macro, then he goes micro. That's the big difference between My question before we got on the air, I'm watching Bubble Vision, CNBC, have all these ads saying, all you have to do is trade for a living. You can make millions of dollars. And I cringe every time I hear them say that because, Dr. Elders, every time you've been on this program, it's not quite that easy, right? Buy low and sell high and all that stuff.
Trading for a living is the hardest way to make an easy dollar. Joke. Trading is very hard. Intellectually, trading is very easy because you're dealing just with 5 numbers: open, high, low, closing price, and volume. Psychologically, it is the hardest game in the world. And once people have their money at risk, that's when they just start going crazy. That's when they lose rational judgment. Greed and fear kick in, and they're in the middle of an emotional storm. So being intelligent, having a few dollars is absolutely no guarantee of success. It takes a lot of time, and it takes a huge amount of discipline to learn to do it right.
Right.
Very people succeed.
I often equate trading for a living like the game of golf. You know, in theory, a game of golf is very simple, but the game of golf is inside of you, has very little to do with the golf course. Is that correct, Kim?
That's correct. It's a lot of psychology that goes into the game of golf.
So also his other book was Come Into My Trading Room, Barron's 2002 Book of the Year, and his earlier book was Trading for a Living in 1993. So for those of you who watch Bubble Vision like I do every morning, I watch it and I see this guy saying, all you have to do is buy low and sell high and all that stuff. Or, I love this one, flip this house. Flipping a house is trading. You know, and I look at it and I cringe because, as Dr. Elder knows, you might put, let's say buy a $300,000 house, you put 60% down. But you've got $300,000 that could reverse on you, and all that. Is that correct, Dr. Elder?
Yeah, with stocks, of course, and especially with futures, the leverage is even greater. And then, of course, what lots of beginners do, they don't even have enough money to trade stocks, so they say, well, let me trade options. In my entire life, in my entire professional career, in which I spoke to countless people, I have never, ever once met a person who made money, who built up capital buying options. Buying options is a mug's game. Professionals sell options. We write them. But these poor beginners who think that they can buy $5,000 of options and have 50,000 a month later.
Correct.
It's unprincipled, dishonest people prey on these poor, essentially poor individuals by selling them a bill of goods and saying, "Oh, this is easy. Sign up to my service, and you're going to be rich before the year is out." Such a lie.
So when we come back, we'll be talking to Dr. Elder about the era of fake news. But once you hear what he says here, be very careful, because I've traded options. And exactly as Dr. Elder says, man, it is very, very risky. It's like buying real estate. You know, an option is called a down payment on a mortgage for a house. It's the same thing. And all these guys can flip this house and flip that house, and I sit there and cringe simply because you've got so much at risk. So please listen to what I'm saying here. I'm not saying you can't do it. I'm saying if you're going to do it, just go in with your eyes open. So when we come back, we'll be going to talking to Dr. Elder about this era of fake news and how do you prepare yourself to get trustworthy information about the economy.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
What is your number one expense in life? Your number one expense. It's taxes. And I've asked the question is, how come there's no financial education in school, but why isn't there education on taxes either? You know, they tell you to save money, which is stupid. They tell you to invest in the stock market, which is stupid. But won't they teach you about taxes? So here we have Rich Dad advisor Tom Wheelwright. We're talking about his revision for his book, Tax-Free Wealth. Welcome, Tom.
Thanks, Robert.
So what's the tax-free wealth about? What's different this time? It's a revised edition.
Well, so what we did was this is the first major tax reform we've had in 30 years, 2017.
Was 86 was the last one?
86 was the last one, back when I was in Washington, D.C.
So many guys got wiped out because of that tax change.
They did. They did. It wiped out an entire industry, savings and loans. This new tax law is just as big, but in a very different way. It affects different industries. You know, the tax law is always a series of incentives. And the question is always which incentives and which ones apply to me. And so the key to revising tax-free wealth was, what changed so much in this new tax law that we can absolutely take advantage of? Seriously, the amazing incentives. For example, the bonus depreciation, for example, for real estate is unbelievable. You buy a $1 million apartment, get a $300,000 deduction or more the very first year.
So if you want to make more money and pay less taxes like Donald Trump and myself, get Tom's book, Tax-Free Wealth.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
It pays to listen. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have a very special guest today, is Dr. Alexander Elder. Now, you can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com. And the reason we archive them is because we're an education company. We don't recommend buy this or sell that. But we recommend you do listen to this program one more time, especially if you have this idea that you can make millions of dollars trading stocks and options or flip this house and all these things that people pitch out there. I don't think it's reality that what a lot of people are talking about. So I would suggest you listen to this program again and be cautious. Make your decisions with eyes open, being more aware. That's all I care about. So you can listen to this radio program. Go to richdadradio.com. You listen to it again, you'll pick up twice as much. But also, if you share with your friends, family, and especially business associates and discuss it, you'll learn even more. Because we're a financial education company, and we're not recommending you do anything but listen to this program one more time. Kim.
So Dr. Alexander Elder, he's a professional trader, and he's a doctor of psychiatry, which goes hand in hand because trading can be such an emotional subject. He's also the author of, his first book was Trading for a Living in the 90s, and then he updated it to the new Trading for a Living that came out a few years ago, Psychology, Discipline, Trading Tools and Systems, Risk Control, Trade Management.
And once again, the reason we have Dr. Elder on is because he's a teacher. I first came across Dr. Elder's students, years ago in that beautiful country called Australia. And they just raved about him. He's a great teacher. He's a great teacher. Versus a lot of these people on television and stuff like that, they may be real or maybe not, but I don't hear too many people raving about them. That's the big thing here. So at Rich Dad, we like to have things be at least real, give you the good and the bad. And as Dr. Elder says, these people who are teaching or trading options, he's never seen anybody make money at it. And these guys who flip houses, we flip this house and all this. I sit there as a guy who, Kim and I own a lot of real estate. I don't know if I'd flip a house. I have, but I really wouldn't want to do that today. Because
there can be a lot of risk in that.
Yeah, because the prices are so high and stuff like that. But anyway, I was driving to work, to do this program today, and these DJs got on board. They said that there was a survey done. They asked adults, what did school not teach you that they wish they taught you? He said 100% is, why don't they teach us about money? And for those that listen to the Rich Dad radio show, we've been around. I mean, Rich Dad's been around for 22 years now. And we said, why don't we teach kids about money? And our schools still don't teach anything about money, and I don't think it's a mistake. So that's why we have the Rich Dad radio show. We're here to educate you, not tell you what to do. So Dr. Elder was telling us about what indicators he looks at. Indicators, what's the real facts, Jack? So the Baltic Freight Index is the amount of trade
Baltic
going
Dry
across.
Index.
Dry
Baltic
Index.
Dry Index.
I went to school at U.S. Merchant Marine Academy to drive ships. So anyway, so Dr. Elder has a story about him going to a school in Vermont and volunteering pro bono, means for free, going to teach them about how he does what he does so he could show the kids. So Dr. Elder, would you mind sharing what happened when you tried to teach the class about money?
The story actually has a pre-story. Back when I was living in New York, I was very friendly with the principal of the school to which all my kids went. And one time I was having lunch with the guy, and I said to him, there are only two topics you must teach in school, money and human relations. Everything else is optional. So the guy says, well, we already teach human relations. Why don't you come and teach money? And I taught money and trading in a private school in New York for a year. I opened a $40,000 account. We made money. At the end of the year, I gave half the profit to school, half the profit distributed to class members. But I ended up hating the kids. There was a bunch of spoiled brats. I really didn't like the kids. So I never
human relations. Human relations were backward. So 5-6 years ago, my wife and I moved to Vermont, very pleasant, mountain environment. I go to local. I figure kids are going to be good here. So I go to local high school, and I say to them, "This is who I am. This is what I do, and this is the course I taught in New York, and this is what I would like to teach here for free. Of course, I don't want a penny from you. I'll teach this course. I'll open a $50,000 account, and at the end of the year, if we make any money, my money will be at risk. If we make any money, I'll distribute it to class members." So that's the program. So back and forth, we're planning the whole thing. They got 6 or 7 kids who were going to be in my class. And then they say, well, I say to them, here is a book I want all of you to read in summer. And the first thing we'll do, first Monday in September, I'm going to give, or first school day in September, I'm going to give you a test just to make sure you've read the book, because just to show me that you're diligent enough. And the school people say to me, no, not the first weekend in September, first in December. Why? Oh, because we have soccer, and this class will interfere with the soccer practice. And that's it. I said, look, we cannot start in December because we have to cover so much theory, then we have to start trading, and there are school breaks and vacations, and I go away on trips. There is simply not enough money to cover theory and to trade. No, we have to start in September. No, we cannot start in September because of soccer. And I realized we're going nowhere. I turn to the kids and I say, kids, if you think you can make $1 million playing soccer, you should play soccer. And that was the end of it. So was that the end of your teaching career in the school system?
Yeah. And then my wife says, oh, if you want to teach, there's a beautiful private school about 40 minutes away. You could talk to them. I say, I don't want to drive 40 minutes. I want to drive 1 mile down to my local school here. It's not a business proposition for me. I just want to do it, and I'm not in any case. So that was that. The value of education. Value of education is really not high.
Yeah. Well, we tried to donate like 500 cash flow games to this local school system here in Phoenix, and they said if you jump through these 50 hoops, we'll maybe consider it. we're giving them to you. Yeah. We're not. You don't have to pay for them. No, we don't want them.
Yeah.
And the problem is, Dr. Elder, is you jumped ship in Africa, a Soviet ship. Was that because you didn't care for communism and socialism?
I hated communism. I hated communism. As a matter of fact, there is a book. As a young man, I was going to change the world. There is a book put out by the Hoover Institution at Stanford University, the KGB wanted list. I'm in that book twice. So I didn't like them, they didn't like me, the communists. And that's why I really I risked my life to jump ship and to come here.
As Karl Marx says, the purpose of socialism is to get to communism. This was what Margaret Thatcher said about socialism. The problem with socialism is that eventually you run out of other people's money. And isn't that true? I mean, we have now more socialists running for political office in America than ever before. I mean, this AOC, Alexander, she's a very attractive young woman, and she went to a very fine school, but she wants free education, free food,
and
free
a lot
housing,
of the young
free
people
medical.
are starting to mouth the same doctrine.
And then if you look at what
socialism.
happened in Cuba and Venezuela, I mean, Dr. Elder, isn't one of the reasons you came to America is the ability to be a capitalist, to make money? I mean, so what do you think about all of this drive inside our school system to teach kids to be socialists and communists without knowing it?
Our former vice president, Al Gore, received a Nobel Prize for this film that he made, An Uncomfortable Truth. I went to see the movie. To me, it looked like one PowerPoint. I never knew they gave Nobel Prize for PowerPoint. But in England, eventually the government educational office decided that if they were going to show this film in class, because it was so full of lies, they had to provide the kids with alternative materials to show them that this was just one man's opinion and by no means truth. But I mean, this essentially sort of leftist communistic agenda. The government is going to control our lives, do everything. It's absolutely pervasive. I don't feel much of it living in the mountains in Vermont. I mean, we decide local. Our form of government here is a town meeting. First weekend in March, everybody comes together and decides all the questions. But once I go to New York, where we have essentially a communist running New York City, this de Blasio guy, it's shocking. It's shocking. But I'm no longer a kid. I'm not trying to change the world. I can just look at it and say, this is utterly insane, shrug my shoulders, and go on with my stuff.
Thank you for saying that. So this whole thing, the reason that Rich Dad was formed, 22 years ago now, is because we need financial education, which will never, ever, ever, ever happen in our schools. I mean, I taught in schools in South Africa. It was horrifying. It was one of the most horrifying experiences of my life, and I've never gone back to teach again, because the teachers they don't know it. They're just like my family. They're hardcore socialists and communists, and that is because they don't know anything about money, and they think the government should give everybody everything for free. And as you and I know, it's other people's money. It's my money. It's Robin Hood. Take from the rich and give to the poor. And that's why we have such a huge gap. So I think one of the most important things you said the last time we were on, what does it take to get to be nearly as good as you in trading for a living, where you can make money going up and make money coming down and live anywhere in the world you want? What they promise you in all those infomercials. What does it really take?
It takes a tremendous amount of work. It takes commitment and focus and continuing work. Now, I did not learn how to trade just by picking up a few books or taking up a few courses. It was years of blood, sweat, and tears. Well, not so much blood, but sweat and tears until I finally figured out the game and started reliably taking money out of the markets. And I continue to do the work. Not long ago, I went with my wife and another couple to Venice, and I was in the midst of a big trading campaign. So every morning we would have breakfast together, and then they would go and sightsee in Venice. And I found a cafe with an internet. I would sit outside with my computer and a cigar, and do my work all day in Venice, and then have a very pleasant dinner with my wife and my friend. But I don't know too many people who are committed enough to be in a foreign country where you're supposed to throw everything to the wind and just enjoy yourself and continue working. It's serious. It's work. And those characters on TV, Well, I don't own a TV set. I haven't owned a TV now for about 20 years, but I see them on YouTube. They make trading sound easy, which it's the opposite of easy. Let me assure you of that.
So if somebody's got a full-time job and they're not happy in their job and they really would like to do something else, and this sounds really interesting, where do they start?
They have short-term trading is really probably not for them because they cannot be in front of the screen. But they have to think hard and to figure out what's the next big idea. Now, those ideas don't happen every month. But if you can generate or discover or find out one or two a year, you can do very well indeed. For example, last year, one of the two biggest profits of the year for me was Brazil. They had an election. I knew that they had an election coming up, and then in July I was in Chicago and I had dinner with this client of mine who is a former Brazilian army captain, been in America for 20 years. And we talked about this presidential election coming in Brazil. They had this guy, Jair Bolsonaro, running for president, also ex-paratrooper captain. And the media just hated him, that he was, he's an army captain. He is not your touchy-feely soft guy. But he hated corruption, and he hated crime, and he ended up being elected president of Brazil. Brazil is a rich country, rich in people, rich in resources. They have technology. They build jets which they sell to America. But it's completely crime-ridden, corrupt place. And having the new management come in, they call him Little Trump in Brazil, was a sign of progress for the country. The media hated him. The Economist magazine from London had him on the front cover, the danger of Brazil. Well, meanwhile, the guy got elected in a landslide, and the Brazilian market just stood on its tail and went up. And to me, anytime an economic nationalist gets elected, the country has a bull market. It happened in India when Modi was elected. I missed that one, unfortunately. Then, of course, we had Trump elected in this country. I didn't miss that bull market. And then Bolsonaro in Brazil. Now, this is an example. This is just one of the examples of a big idea that doesn't occur very often, but you have to be alert to them. What else?
Well, that's like Dr. Elder. About 3 years ago, you told me to watch Petrobras because it was going from like $35 a share or something, or $70 a share, and it dropped down to $1 a share. And so by the time I was in on it, I was at 3, and so you're just listening to you about Petrobras, and what is it at today?
15.25 as we speak.
So that's what Dr. Elder is talking about. It's not about buying, holding, and praying for the long term, which they teach you in 401k school. But anyway, there's so much a person can learn. So we're kind of out of time. I wish I could talk to you longer. But again, you have this new book, New Trading for a Living. Can you tell us a little bit about your book and why people should get it?
Well, it's translated into 16 languages. It is the world bestseller when it comes to trading. It's really, I think it's there are several good books out there, but I think this is the only complete book because it covers everything from psychology to market analysis to risk management to self-management. So that's what makes it unique.
And self-management is probably the most important, isn't it?
That's right.
So, Dr. Elder, thank you very much for being a fabulous contributor to our program. Thanks for being a great real teacher. I have a new book coming out, Dr. Elder, it's called Fake Money, Fake Teachers, and Fake Assets. So the reason I at the Rich Dad Radio program, we pride ourselves in having what I consider real teachers. You can speak badly about real estate. You can speak badly about anything you want as long as it's coming from your real point of view. And that's why I appreciate you having on the program, and you tell it like it is. So that's why I appreciate it. So once again, Dr. Elder, thank you very much for being on the
Thank you,
program.
Dr. Elder.
So thank you for everything you do for the people, because I'm sure you changed countless people's lives with your Rich Dad, Poor Dad concept.
Well, we do our best. We just want to be real out there and tell people what we see from our little corner of the world. So once again, thank you, Dr. Elder.
Thank you so much.
And when we come back, we're
And
going
thank
to
you.
the most popular part of our program is Ask Robert, where you get to ask me your questions.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and Rich Dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Financial freedom begins with financial education. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, I want to thank our guest today, Dr. Alexander Elder. He's a professional trader and author. He was born in Leningrad, became a medical doctor, and jumped ship. And he's also grew up in Estonia, great country. And he jumped ship in Africa, and he now trades for a living in the States. He loves capitalism, he hated socialism and communism. And the reason I mention that is that's where our country is going right now. We're becoming socialists as well as communists. And that is kind of frightening because I went to Vietnam to fight for capitalism, not socialism or communism. But as you know, our school system filled with people, they're good people, most school teachers, but because without financial education, most are hardcore socialists, some lead to being communist. And it's just a philosophical thing. It's all psychological, as Dr. Elder says. And he says when it comes to money, people go crazy anyway, so they're all nuts. And
he says, as soon as somebody has money at risk, then intelligence goes out the window. And he's a doctor of psychiatry, so it's a perfect match to be trading because it's such an emotional thing. And it's like you said earlier, it's like the game of golf. The game of golf is really in your head more than in your skill, physical skill.
It has nothing to do with a golf course, really.
No. And Dr. Elder is the author of The New Trading for a Living, and his website is elder.com.
So, ladies and gentlemen, thank you for sending your thanks to Dr. Elder, and you can submit your questions to Ask Robert at Rich Dad Radio. And now we get to these questions. But once again, please listen to what Dr. Elder says. I don't necessarily agree with him, but he is for real. Fake is about we are listening to too many fake teachers. And a fake teacher is somebody who talks about something they know nothing about. And my God, when it comes to the psychotic subject of money, most people are talking about something they know nothing about. Why do I know they're talking about something they don't know nothing about? Because they haven't got any money. You know, if a person has money or they're successful at money, I listen to them. But if they don't have any money, I kind of sip my tea as I listen. What's the first question for Ask Robert, Melissa?
Our first question today comes from Angel in Wisconsin. Favorite book, Rich Dad's Guide to Investing. What are the best, most profitable, and worst, biggest loss deals you and Kim have done, and what did you learn from those deals?
Okay. I asked for that question specifically. We got that question every single day in different forms. One of the biggest problems with going to school is they teach you that making mistakes means you're stupid. And look, ladies and gentlemen, you don't make money unless you make mistakes. You cannot be a great golfer unless you hit a few balls out of bounds. You don't learn to walk unless you fall down once or twice. You don't learn to ride a bicycle and you risk falling off. But when it comes to real life, most people go to school and they put training wheels on their life. It's called don't make mistakes, have all the right answers, do as you're told, and do what Wall Street tells you to do, which is save money and invest for the long term in a well-diversified portfolio of stocks, bonds, and mutual funds. That is the best advice for somebody who is academically smart, because they're not going to make any mistakes. But in my opinion, it's the biggest mistake of all, which is why I wrote the book Fake. So the answer is this. Every time Kim and I have lost money or, made mistakes, we've actually gotten smarter. It's like a kid who falls down. They eventually learn to walk. But I would say 95% of the population is so terrified of making mistakes, they just do as they're told. They get a job, they save money, and they invest in the stock market, in their 401k or Roth IRA, and then they wonder why they can't make any money because they're terrified of making mistakes. Any comments, Kim?
Well, it comes down to kind of reframing, because I look at the question Angel's asking. He says, what was the worst, your biggest loss? Well, anytime we had a loss, it was a great deal because we learned something and we got smarter from it. So it's not right or wrong. It's not good or bad. I mean, every mistake you and I make, Robert, is not a bad thing. It's a good thing. I mean, if you can start looking at mistakes are a great way to learn, it's a good thing. I don't like making mistakes, but when I make it and learn from it, I get smarter. So a bad deal is not a bad deal if you've learned from it, and you it takes me to the next deal, which is better.
And Kim writes about her biggest mistake was listening to that silly attorney.
Yep.
And
Big real estate deal.
It was a fitness club out of Florida in Miami. And because you were so afraid of making mistakes, what happened?
That's exactly right. I was so afraid of making mistakes, afraid of losing money, afraid of what people were going to say.
Looking stupid,
that I brought in an attorney. And the deal was in Florida. I bring in an attorney from Arizona who knows nothing about Florida. The deal just got worse and worse and worse. And finally the seller said, I'm done. I'm not selling. And when I stepped back, I was so angry. But I wasn't angry at everybody else. I was angry at me. I was angry at me for being so afraid of making a mistake, afraid of losing money, that I immediately turned around and the next deal that came my way, actually I knew of it and I sought it out. And within 60 days, we had a much better deal, bigger deal, 3 blocks from our house. And to this day, that is one of our most profitable assets.
So that really look, most attorneys are important, but most are parasites. They don't really do deals. They queer deals. They make it so bad.
It's so complicated.
And they argue and
what
they
if this,
fight
what if that, what
and
if
they
this?
just drag it out.
Yeah.
And they're parasites. And so when you think, how many times have we been in trouble? It's because of attorneys. And they're supposedly smart people. But their job is not to make the deal work. Their job is to make the deal complicated and messy and get aggravation going on both sides so they can drag it out for years, and all you do is pay them. They're a bunch of parasites. But that's why we say at Rich Dad, you better find great attorneys. And unfortunately, how do you find a great attorney?
You kiss a lot of frogs.
You find bad attorneys. So my point in answering that question here is that those of you who went to school and your mommy and daddy taught you not to make mistakes, you have been shortchanged. You have been taught how not to learn, how to be safe, how not to make mistakes. And so exactly as Dr. Alexandra Elder says, when you put money at risk, you go nuts. Next question, Melissa.
Our next question comes from Garrett in Florida. Favorite book, Rich Dad, Poor Dad. He says, I'm a 25-year-old male with a matching 401k through my employer that I've been contributing to for 2 years now. Has $8,500 total, invested 100% in the S&P 500. Question is, would you recommend I take my current earnings out and eat the early withdrawal fee in preparation for a market collapse, or remain in and deal with whatever happens when the markets do collapse?
Well, that's a great question. But first of all, why are you in a 401k? Now, I know because they tell you it's matching and it's the employer gives money to you. That's BS. It's your money anyway. The employer just tells you it's their money they're giving to you. But I wouldn't take that money out. I would just leave it in there. I think you're doing good. I would study the markets now. Is there a better way? Can you crash proof that 401k? That's the question. A way to maybe crash proof it is go to cash, go to money market funds. I don't recommend it, but you may want to consider that because we've had several other guests on it who've said the biggest asset there's going to be in the next 5 to 10 years is cash. Because, ladies and gentlemen, this whole economy, our government, a stock market, and all these buildings out here are floating on debt. The U.S. government is floating on debt. That's why it's shut down right now. The economy is floating on debt. The stock market is floating on debt. And the bond market is floating on debt. We have never floated on so much debt in the history of the world. That's why December 12th, 2018 was the biggest market crash in history. Worst December since 1931, because it's floating on debt. The question is, can we pay off that debt? I don't think so. So the real problem is not the stock market, but the bond market. And what that means is if there's no cash, because people can't pay off their debt, cash might become king again. Because, as you know, there was quantitative easing, QE. Today we're in QT, quantitative tightening. The Fed's pulling money out of the economy. That's why it's slowing. So you may want to study a little bit. I'm not recommending it, but you may want to consider just going to money market. You've never heard me say that before, but you may want to go to cash if you're afraid that it's going to crash. Any comments, Kim?
Well, I think this all goes to Dr. Elder's whole point, is that instead of asking us what to do with your money, are you willing to get the education you need to figure out what to do with your 401k and what to do with the stock market? I mean, all you know is if the stock keeps going up, you're going to do okay, but you don't know how to make money when the stock market comes down. So Dr. Elder's whole point is how willing are you to get the education that you really need so you're in control instead of asking other people what to do with your money.
Make your own decisions.
Yes.
So once again, I would suggest you read Dr. Elder's book, The New Trading for a Living, because he's a psychologist. Because most of it is when people get around money, they go nuts. And if you withdraw that money, it's probably going to be gone anyway. You'd be penalized 10% on withdrawal, and you'll go nuts again. And if you can't control how nuts you are, that's like you shouldn't play golf either, because you go nuts. You got to be calm and collected. So really, those are the things that we recommend here. It's like you flip that house. Jeez. This guy was flipping a $300,000 house. He had to put, $60,000 down. Elder calls that position sizing. I mean, you're taking so much risk to make so little. Your risk is so huge. And if it goes sideways on you, then you have tax problems. If you flip a property because of short-term capital gains, the average guy doesn't know that. So that's why we have the Rich Dad Radio Show. We have people like Dr. Elders on. We don't necessarily agree with everything he says. But like he says, if you study, get this one big move, like he figured out with Brazil in about 3 years ago was Petrobras, which I invested in. We did very, very well. And he doesn't care if the market goes down. That's the biggest thing we have him on for. If you're worried about the market going down, then I would study more. That's the biggest point here, because I don't really care if it goes down. But you might. We're at Kim's mom's house, and when the people who are along the market, they're going, "Oh, what if it crashes? What if it crashes?" I said, "I don't care." And they went psycho on me. How can you not care? Well, because I don't have any money in the market, that's why. And if it goes down, I'll make more money. And that's really kind of what the Rich Dad Radio program stands for. If you study, listen to it, and we don't recommend any investments, but you want to get to the point where you don't care. Market goes up, you get rich. Market goes down, you get rich. So once again, thank you for your questions. Thanks for Dr. Alexander Elders. So you can submit your questions to Ask Robert at richdadradio.com, and thank you all for listening to this program.